Hey, good afternoon, guys. So this week and next week, I had a lot of California videos planned from all the cars we've driven out there and the adventure out west. But I realized it's been quite a while since I've made the last business video. And so many of you guys have said, make a business video. How do I get involved in stocks? Like a lot about stocks, which is obviously something I do, like you knew from the last video that you watched. But I figured, well, I'll give you a break from the California content and put up a video focusing solely on how to get started in stocks, because 99% of you guys were like, I have some money, I want to start investing. Can you teach me the first initial steps of getting going? And that's the big thing, just getting going, starting trading, and getting involved. I'll try to keep this video as kind of simple and basic as possible. I'll go over some key terms, and everything about starting the accounts and beginning to trade. That's what this video is going to focus on, and we're going to get right into it. So the first thing you're wondering is probably, how old do I have to be and what are the requirements? So you have to be 18 years old, minimum age, and you wonder, well, how did I make an account or whatever? When I started trading, I was 16, about maybe a little over a year ago or something. But when I was 16, my brother was 18, now he's 19, so we're good in that department. But so minimum age is 18. And if you're younger than that, don't worry, because they have things where you can make joint accounts with your parents. So that is your option. So if you're under 18, you're gonna have to do something with a custodial account with your parents or something along those lines. But if you're over 18, you can make the account yourself. And I'm just getting distracted because like a car's on fire over there, but okay. Anyway, so next you're probably wondering what information is required for me to make the account. And luckily it's pretty simple to make a trading account. It doesn't take very long. So that's the good thing, but you're gonna need stuff like, they're obviously gonna need your social security number, addresses, contact information, all that good stuff. And another thing you probably wonder, is there a minimum balance or starting balance you need to start the account? And okay, so yes, there most likely will be, but it depends on which broker you go through. And okay, a lot of people have asked me, well, which broker do I go through? Which do you go through? Who do you have an account with? How do you do it? Okay, so I personally use Scottrade. A lot of you guys are wondering that. That's who I use, but believe me, there are so many other good ones, and you just got to kind of poke around and see which one works best for you. All of them have different trading fees, starting balance, account number, a lot of different requirements for each brokerage account. So do some research, figure out which one works best for you. But I just like Scottrade because it's quite easy to use. They have a good mobile app, and friends of mine have said they're really good with their rates and customer service and stuff like that. So works good for me. I've never had a problem with them. So back to the minimum balance. For Scottrade, when I was setting up the account, I believe it was $2,500 minimum balance, starting balance. And that was okay for me. I just wired money over to my trading account and I had the minimum balance. I think at that point I began trading, and that's when my first trades were with Hecla and Mux, like I mentioned in the last video, which have gone up an incredible amount, 4, 5, 6, 7 times since I began. So those are huge skyrocketing stocks, but those are the ones I started with, and I've traded a bunch since then. The cool thing is with trading is, and the reason I got into it was because at school, I'm still in high school, I'm going to be a senior now in a few weeks when school starts back up, but I liked it because it kind of gave me something to do in school. Like, I mean, yeah, I probably shouldn't have been, but oh well, So in class or when I had a break or whatever, I would just do some trading. If I saw a good deal, if I saw a play that was worth it, then I would go ahead and take advantage of it and make the trade. So that's why I like stocks. That's why I got into them. But yeah, I back then in school, I was trading like once a day or maybe a few times a day, depending on when good plays came up. That's the big thing. I wait for when I can make money on a play. I don't just buy stocks to buy stocks. Like right now, I have very little holdings, very few number of stock holdings, but that's just because I don't see a ton of plays right now. But then again, I'm not looking super hard right now because I'm super busy with YouTube and other business stuff that I keep an eye on the stock market, but I'm not as active as I used to be. So, wait for something you see that's a good deal in your opinion, but you can do as much or as little trading as you want. I just pulled up to the post office here. I got to go drop off some packages, but just give me a minute and I'll be right back. Give me a few seconds. 3, 2, 1. Okay, I'm back. So, where did we leave off? All right, next I want to talk about a few things that you need to know before I want you to start trading. So, a huge one. This is one that I try to preach all the time that I don't hear enough other people saying. It is to what I call fake trading. I've told some of you guys who have messaged me and emailed me about it, but that is something I would totally recommend. So what I mean by fake trading is when you don't have to actually make the trades. There are multiple apps. The one that I used and started on is called Stock Wars. It's virtual stock trading. So there's no real money on the line. That is huge. Okay, so I don't want you guys to go take all your real money and throw it in the stock market right away because you could lose it. That would be very bad. That's why I totally recommend starting off with this fake trading. So you don't have to put your cash on the line. It's just virtual. Now the game updates quite often so that all the stock prices are current. You can go through the exact steps of making trades, putting in orders, buy, sell orders, whatever. So it teaches you, one, how to trade in a way, and it lets you see if you can do it, if you can make money. It lets you start out with as little or as much as you want, up to like $100,000. And this is really what kind of got me going on stocks and said, all right, well, I'll give it a try. I think I started with like the $100,000 amount just to see what would happen. And then within a week or two, I turned it into 120 or 130 grand, and I didn't lose any money. So then I did it again just to be sure, with another 100,000. And sure enough, within a week, 2 weeks, I'm up 10, 20, 30% on my money. Not bad for a week or two of just amateur trading. So at that point, I said, you know what, let's do it for real. And then that's when I set up my account and started going through the whole process of getting everything ready to trade. And then I started making trades for real. But anyway, that's one thing that I totally recommend. Go check it out. Stock Wars, I think it's called. They are not associated with me at all, but I think it's just a good app to maybe check out and to see your luck at trading and see if you do good. All right, so let's get back on the road. So let's see, another thing I want to talk about, again, before you really get involved in trading, I want to say it's very fast paced and you can get caught up really easily in it. So I've been told, and what I'm going to tell you guys is to know what price you want to get in at. Maybe it's not even at that price yet, but know what price you want to get in at, have buy orders at, and know when you're going to get out. Okay, that's huge, because when a stock keeps rising and rising and rising, you get all happy about it, and you think, just in your mind, sometimes you can think, oh, well, it's going to go higher, it's going to go higher, it's going to go higher, and then it crashes, and then you're screwed. So when you buy the stock, you need to know at that point when you're going to get out, because you don't want to get caught up in something and you don't want to get screwed in the end. So say you bought the stock for maybe the stock is at $1.25 and you say, I want to get in at $1. So you can put in buy orders in advance before it's even at that price. So you can say, I want 500 shares at $1. Have the order sitting out there, good till canceled. And then when the time comes when it goes to $1, then it'll automatically put that order through and you'll have those 500 shares at $1. And then at that point, I would say you need to know when you're going to get out. Maybe it's at $1.50, maybe it's at $1.25, maybe it's at $2. But have that in your mind, have that written down so that you don't get caught up in anything and you know when you're going to get out. And you can even put in a sell order right after you buy it at $1.50, good till canceled, and wait until it hits that price. Now, another thing is know when to get out is to know when to get out to cut your losses early. If it's going to continue to go down, or even crash, you're going to want to get out of it early. So you have to know, hey, if you didn't get this one, you may just have to cut your losses early. I've seen a couple people get saved by cutting their losses early. Yeah, maybe they lost $1,000 or $2,000, but it kept them from losing tens of thousands. So also keep that in mind. One thing I really love about trading is that you can make money when stocks win huge and when they fail big. So on the way up or the way down. And you may say, well, what the heck? How do you make money on the way down? Well, if you don't know already, it's something called shorting. So when you short a stock, you're basically betting that it is going to lose. So, all right, so say a stock is at $100 and you go, this is a scam company, their products are going to fail, this stock is going to crash. All right, so you can go ahead and put in a short sale and they will essentially sell those shares and you have to cover them. You have to cover your short later on after some period of time. So you would hope that $100 stock goes to 75, 50, 25. The further down it goes, the more you make. And when you decide to cover the short, that's when you replace those shares that they sold already and you profit the difference. So it's a way to make a ton of money going the opposite way. So a lot of people will profit off scam companies occasionally, or just companies that they don't see going up. The problem with shorting, you can lose an unlimited amount of money. And again, you may go, how do you lose an unlimited amount of money? Well, with normal stock trading, if you're just buying long, they call it going long on a stock, you can only lose what you have into the stock. If you paid $100 for those stocks and the stock crashes, you lose your $100 you had in the stock. Pretty simple, right? But when you're shorting a stock, you're shorting that $100 stock, if it can go to $200, you lose $100. It can go to $300. You now lose $200 when you have to go replace those shares. So now you're losing more than the $100. You get it? So normal trading of a stock, you can only lose what you have in it. But right when you go shorting a stock, it has unlimited loss potential because the higher it goes, the more you lose. That $100 stock could now go to $1 million a share. $1 billion. What you see how it's unlimited loss because you have to cover those shares at the price that they went up to. So that's the thing with shorting. Yes, there's a potential to make money in a kind of different way, but oh my, you could really get screwed. You could really get in a jam. That's why we come back to the cutting your losses. That's kind of big on short selling because if the stock's starting to shoot up and you're going, oh crap, this thing's going to skyrocket, then you're going to want to cover those shares right now before it skyrockets. And just to cover a few terms that you're going to need to know, one being IPO, you may have heard that thrown around. That means initial public offering. And that's simply when a company goes public. That's all you need to know about that. That's when their shares are now for sale. They go from a privately held company to a public company. So that's a term. Another one is free ride. You'll hear this. So a free ride is when you know how I was talking about those payments needing and the money's needing to be settled? Well, that settlement period is If you trade in that settlement period with those funds that aren't settled, it's going to be called a free ride. And there are some, of course, some violations and rules against that. So you got to be careful. Check into that. So make sure the funds completely settle before you go trading with them again. And you also hear the term lockup period. And that is simply when basically insiders in the company or early investors, they have this lockup period on their shares when a company goes public, IPO. They have this period of anywhere from 90 to 180 days or more or less, depending on what it entails. But this lockout period prevents them from selling their shares too early, and it makes them wait to sell those shares. And just one thing I want to clarify, I've heard it so many times that the value of a stock means how safe or good the company is, and that is absolutely not true. They have no correlation. Berkshire Hathaway, one of the highest priced stocks, hundreds of thousands of dollars, is not the safest, best company or whatever. Apple is worth far more than them, and their stock price is 110. So they have nothing to do with each other. It's all about outstanding shares, and market cap is another important one. Another term, market cap, that just means the value of the amount of outstanding shares times what each share is worth. So companies like Apple will have a huge market cap of, I don't know, hundreds of billions of dollars. So that's all it means, the number of outstanding shares times how much each share is worth. So it gives you an idea of the size and volume of the company. Sometimes with big companies, another term is something called a stock split. And that is when a company has a very high stock price. Well, it doesn't necessarily need to be very high, but a lot of times it's a very high price, and they decide sometimes they'll double the amount of shares, which cuts the price in half if you think about it. So a lot of times companies will do this to make their stock more affordable for the common man to invest in, or it just appeals to more people. Endless reasons for it, but that's simply all that is. And there's also something called a reverse stock split, which is exactly the opposite. That'll often be the case with companies that are struggling to get by the price requirements to be on certain stock exchanges. So say the minimum price is $1 and they're at 10 cents, they're going to need to up it before they get booted off that market. So they'll do an at least 10-to-1 reverse stock split. Check all those terms out. You can Google them on your own and look into them more, but those were just some important terms that I realized I needed to know while I was trading, and I think they'd be beneficial for you to know. I'm not going to really get into this, but there are so many different things you can do within the stock market to make money. So there's just the normal good old trading, and then there's shorting, like I mentioned, shorting stocks. But then there's things like trading options, futures, forex tradings, which is trading currencies. There are tons of things you can do. It's not just, basic old trading. All right, guys, so I hope I hit on most of the things I wanted to. I think I checked them all off. But anyway, those were some things that I did when I started off trading. And keep in mind, again, I don't trade 24/7, all the time. It's just something I do either when I'm at school or just in my free times. But I always check the prices of the stocks in my watch list every single day just to look for a play. And if there's an opportunity where I can make some money, I'll jump on it. So anyway, I'm patient. You may want to be patient also, but remember to know when to get in and out. Definitely start with the virtual game just to see how you do that way before you put your own money out there. But, start small. You can start with as little or as much as you want. Look into the minimum balance that you need in some of the brokerage accounts. But other than that, you can start with as little or as much as you want. Trade as often or as rarely as you want. So it's kind of up to you. And again, it's not for everyone. There's a bunch of risk involved. You guys may have some luck in it. I know a lot of you guys were asking me for this video. So there's the video. There's what I know about the stock market. I'm by no means an expert at everything with the stock market, but those are some things I know. So hopefully that helps some of you guys out there. But thanks so much for watching. I know that was a long video, but there was a lot to cover. And I'll get back to editing some of the stuff in California with all those cool cars we drove and stuff. So look forward to that stuff, and I look forward to seeing you in the next video and all the other ones. So have a good day. Bye.
Say that it feels right.